Let's move to some more result reactions and that have been coming in, and the ones that are, not that pretty, to say the least. We're talking about some of the financials where business trends have not been that robust. SBI Card has been under pressure. Let's bring in Abhishek to discuss the details. Abhishek, I think one of the points you were raising was the revolver rate is low, and then obviously there's this whole issue with the rising cost of funds. Just explain to us what happened with SBI Card in Q3.
Well, the most highlighted point in the results was the credit cost. Now, quarterly credit cost was at 8-quarter high of 7.5%, and for 20 quarters in a row, the credit cost has been north of 4.5 to 5%, which is on the higher side. So, for 5 years, the credit cost has not come under control, and that is impacting in their stock price as well, which has now reached their IPO level or below that also. So, if you take a look at the revolver rate, is at all-time low of 23% versus 24% sequentially. Now, revolver rates are those rates wherein if a customer uses SBI Card, whether that amount gets translated into EMI or not. So that has been declining, because in terms of translation into EMI, that is where the real picture is, and that is where the real earning for any lender is, and that has been on a declining trend. Net interest margin is at historical low of 11.3%. Annualized credit cost is at 8-quarter high of 7.5%. So as I explained earlier, for 20 quarters in a row, their credit cost has remained elevated, and in terms of con call as well, they have guided for elevated credit costs in the next 2 quarters. Asset quality, gross NPA in absolute value is up 19% YOY. Net NPA is up more than 25% on a sequential basis. Gross NPA ratio has increased quarter on quarter. Net NPA ratio as well as increased on a sequential basis. So in terms of the PNL performance, while NI is ahead of Yes Securities estimate, PAT is below Yes Securities estimate. Now, brokerages say that management expects 2 more quarters of elevated credit costs, but they could not give confidence on when it will start to taper down. Get normalized beyond 2 quarters of pain. This will cap and derate the P multiple until clarity emerges with respect to substantial decline in credit costs that the management can foresee. So Morgan Stanley downgraded the stock to equal weight. Target price has been cut to 750 from 950, while IncRed has a reduced rating and a target price of 500 per share. Back to you.
Okay, all right, got that. Abhishek, thank you very much for details on SBI Card there. We'll take a break.